Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update, and we are on now Wednesday, August 28th. I'm sorry, I'm going to do that. Wrong date. Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, August 29th, 2018, about 3:50 p.m. Central Daylight Time. I'm impressed at the gold market. Even though it's down $1.40, $1.50, it's acting well. As long as this market doesn't get back under 1189.50, it appears to be trying to carve out its first attempt at a solid bottom. Remember, we went into the 1160s. I think that was still a lot of selling out of emerging market countries, if you will, people that were having trouble with their finances, dumping the gold, and it seems to have come back a little bit. Your euro was up, dollar down, helpful again to the markets. Now, I'm not surprised to see the copper down. You know, if you read the news, you can see that the U.S. is going to save China for the last barrier on trade. In other words, they'll be our toughest talk. We are hoping that we see that Canada joins Mexico and the U.S. in a trilateral new agreement. Then we don't have to call it a Mexican-American trade agreement. We can call it back to NAFTA or whatever the president says it should be called, but it'll be something along those order. We heard Justin Trudeau say that they're getting close. That's very important. The problems are still probably going to be dairy and how they dispute some of the arenas that they get into. Canada doesn't like what Mexico has agreed to in the dispute clauses. We'll see how that all goes. It's going to be interesting. As we come to the gold market, obviously, you can see from this move, you went down almost $200 an ounce, and you've had a bounce. I cannot tell you that all of a sudden this number is your magic bottom, but I can tell you the market's trying to make it that way as it has established an uptrend, and you can see how the market's working within that. Within that part here, this is without the swing line. With the swing line, you can see how the market's got a clear pattern of higher lows and higher highs. That is bullish. When you look at where the market keeps pulling back to, it's the 18-day average. From the break it pulled there, then we had a small rally, and it's been testing that area out. I'm going to repeat what I'm saying. I think that as long as you don't take out 1189.50, the market has an opportunity to give more of a bounce that it's having right now. Where could it go? Well, if you can clear this 1220 area, I don't see why you can't make a run for the upper Bollinger Band. So what I'm looking for the pros to say is that they see support at 1205.40. They wouldn't want to see the market under 1189.50, which is bust apart the opportunity to have a basing pattern. And they see resistance at 1231 roughly. The negative on all this is the market is overbought. It has spent a lot of energy getting up here. And if we go back, you do realize we haven't had an overbought condition since back in March. That tells me that there's a transition taking place in the market. You don't see that often. And I see that that's something that, if you pay attention to oscillators, it's trying to tell us some type of story. In GLD, the ETF of gold, the market has also got a bull pattern, higher lows, higher highs. It too's over the 18-day average of closes. It too is in an area of overbought because the reading is over 70, and I teach, the word is teach, that any reading over 70 in that oscillator is overbought. Now, the laggard has been, and continues to be so far, the gold miners. As you can see, unlike the other two that we looked at, in the gold and the GLD, you're under the 18-day average, which gives it downside bias. So on rallies, I still expect that number to be the resistance. But here too, the longer you can drift sideways, what happens is this 18-day average drops. The market remains in an oversold condition, which to a certain degree puts in abeyance those that want to get aggressively short the market. Most traders don't like to sell into oversold conditions. By the way, I said most. I don't know what most really do. I teach that most don't, but do I know? I don't know. The gold-silver ratio still says that the metals as a whole don't want to advance against the gold, as this market is still a new high on this ratio. So gold is outperforming silver in a rather dramatic way. Like we just showed here on the GDX, this market stays under the 18-day average. It does not have a pattern like the other gold parts where you've got higher lows and higher highs. You've got a lower low and a higher high. It is not oversold, but it also has no momentum going with it. So a problematic chart. In the copper, be careful here. If this market takes out yesterday's low, and yesterday's low was 271.35, what happens is you take out in a market the low of an outside day up, which often, I wish I could tell you it's always, it isn't, which often leads to prices making an attack of lower prices. Maybe it even makes a run for the lower Bollinger Band. In the platinum market, we've run into the resistance back at what I call that 18-day average, that line in the sand, the first resistance point, and it's done its job. Now the question is, what's next? And you've gone up and you made a big challenge and got through the 100-day average of closes, and you have closed over the upper Bollinger Band, and the palladium, the strongest of all the metals, and I know I've been a broken record here saying this is the strongest of the group. Now it's getting to where it's getting overdone. What do I mean by overdone? Well, first, let's see the embedded reading. Both numbers over 80, both over 80, both over 80. So today, you embedded the market. Now, when the red line gets under 80, you'll probably see a change between the strength in platinum and palladium where they might make an attempt at a reverse. It hasn't happened, and I don't know when it can happen. All I know is that until that red line closes under 80 on pullbacks, this market's a buy for, in terms of the momentum traders. Also, I'd be watching today's lows. The market should not take that out. It's an outside day up. You shouldn't take that out by Friday. If you do, this might be a trap for the bulls where it's finally gotten into key resistance areas and it does a bit of a failure. In the dollar market, you're oversold, but in a downtrend, have not yet made an attack yet of the lower Bollinger Band or 100-day average, but the market acts like it still wants to do it. Is it oversold? It is. That means that, again, short sellers might hold back a little bit, but as we've heard better trade between Mexico and the U.S., and now we're here in Canada, the dollar's losing to a number of currencies coming live. And watch the euro, because if the domino effect takes place and we see Canada joins the U.S. on a deal, guess who's next to join? It'll be Europe. And currencies that are going to join probably get a little bit of a run to the upside, as we saw in the Canadian dollar. I want to remind you about our research. We cover tons of research, be it the currency markets we talk about here, the metal markets, the financials. We write for people that are hedgers, commercial users, speculators, both in options and futures trade. So we throw out all kinds of ideas. We've got a full staff of people that write stories on all these. If you haven't seen our research written for commodity people, you owe it to yourself to do it. How do you get a free trial? Simply give us a call at 866-973-2077. You can go to our website at www.iraepstein.com, or you can click up here. After you see me on YouTube, that'll take you right to the page. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.